Ladies and gentlemen, welcome back. I've got a very unique analysis to give you today. I've got an analysis looking at the cyclical charts, looking at trends stemming back all the way from 2012 and how we are copying them exactly and how they perfectly predict the next move for Bitcoin. Obviously, there's a degree of speculation involved in that, but it certainly is something we need to look at. And that next move is actually looking at a retest of something like 30 to 32K. So downside price action, bearish price action. I will make the claim right now. We've seen huge bullish price action over the last 24 hours, and I'll very confidently say that I believe that the vast majority of people in the crypto market are wrong about the next direction of Bitcoin right now. There's a lot to look into. There's a stochastic RSI cross in the weekly chart that we haven't seen in upwards of 7 or 8 months, and we haven't seen an actual one like this in about a year and a half. Lots of things that haven't happened in a long time are happening again. So guys, without further ado, let's get into the content. So we've seen a bit of a pump upwards on Bitcoin over the last couple of days. As you can see, or the last day or so, I should say, as you can see, we saw a bearish engulfing candle followed by a strong green candle. Now, a lot of people are wondering, well, why did we see that green candle? What was the reason for that? Because clearly, we're at a very strong resistance zone here, this red box on the screen between 37.5 and 39.5K. Very strong macro resistance. We've rejected from it from days on end. We've rejected from a few critical lines on the RSI. For example, 88 on the RSI. I've just marked it in the screen. I'll make it pink so you can see it, is a level we haven't gotten above since 2019. We've been rejecting from it for years on end. We rejected from it again, and yet the price seems to be holding up, even in wake of all of this. Well, I'll tell you this right now. The reason why we saw the pump over the last 24 hours has nothing to do with technical analysis. It has everything to do with all of the recent news we've been seeing. We saw one single buyer buy 600 Bitcoin, right, on spot. We saw obviously the stuff with CZ from Binance CEO stepping down, ordered to pay $50 million and an 18-month prison sentence there. We've got Binance ordered to pay $4.6 billion in fines. We've got massive amounts of bidding coming in from spot buyers in general, as basically the SEC has stated that they will not stand in the way of ETF approval. So obviously a lot of news coming in that's kind of distorted the TA itself. But I'm not actually here to focus on the medium-term or short-term TA today. What I'm here to focus on are the bigger picture questions, right? Because we can sit here and talk about short-term all day, and we will do that tomorrow for sure, because by then we'll have adequate price action, adequate price developments to make those updates. Right now, we're not here to do that. We're here to state we're at resistance. What do we know about the Bitcoin macro structure in regards to this resistance and what's going to happen next? Okay, and I've got a very interesting chart to show you today. In fact, I've got two interesting charts. We've got stochastic RSI coming in for a bearish cross that we haven't seen, right, since April this year. Okay, so 7 months ago was our last bearish cross on stochastic RSI. We're coming in for a bearish cross again. That is big news. We've also got this chart here. Now, this is originally showed by Crypto Crew University. Steve from Crypto Crew University actually pointed out this chart. Now, it's a very important chart. It's going to take some explaining. I encourage you to try your best to understand it, because when we get to the end of this analysis, we will know basically what Bitcoin is likely to do next from a macro perspective. And that actually involves, believe it or not, a drop down to the 32K region, okay? So a lot of people right now are getting very bullish on Bitcoin. Obviously, in the last 24 hours, we've seen massive news. Even in wake of all the bearish breakdowns, we've seen, bullishness emerge back in the market. As I said, one singular person buying 600 Bitcoin on spot. That's big, big stuff right there. That's a huge buying order, hundreds of millions of dollars. So, even in wake of this bullishness, the market sentiment is clearly bullish, but I'm actually here to tell you that this bullishness might be misguided, might be misled. Perhaps we actually need to see some significant corrections first, and that's why I'm looking at this chart. So without further ado, sorry for the lengthy introduction. I've been recapping price action. I've been introducing the topic. Let's get into the actual nitty-gritty right now. Okay, so let me explain this macro chart to you real quick. What we have is a situation on Bitcoin where we've seen a leg to the upside, significant leg to the upside, multiple months, around 8 months of consolidation sideways, and then another leg to the upside above 32K. Now, this pattern might not even seem like a pattern at first, but if you look back to the price cycles, you actually see that there's more to this than people think. Okay, this isn't just random price action. This is actually behaving. Bitcoin is behaving throughout the entirety of 2023 in a way of which is very typical, right, on a cyclical level. So if we're looking back in prior cycles, for example, we look back in 2012, we see the exact same pattern. We see one leg upwards, that's phase one. Sideways for around 180 days, that's phase two. We then see a move to the upside, that's phase three. And during that phase, we see 200 days of consolidation before moving to the upside and starting the actual bull market. Now, that happened in 2012, okay? It also happened over here. Let me move forward. It also happened over here in 2015, 2016, okay? So leg upwards, to around 200 days of consolidation, another leg upwards, around 200 days of consolidation, and then the actual bull market. So it's happened twice historically, right? Perfectly to the T, just like what we're seeing here in 2021. Perfectly. So again, a leg to the upside, okay, sideways for around 200 days, another leg and sideways for 200 days, speculatively, right? That might happen, it might not happen. And then again, around May 2024, when that sideways period ends, we'll start the actual bull market. That lines up with the cyclical structure quite well. Now, the complicating factor is we haven't seen the exact same structure in every single cycle. We've seen similar structures, right? Structures in which we've seen basically moves to the upside, pretty significant consolidation below the yellow line I've listed on the screen, and then moves to the upside again. So kind of these 200-day breaks. They all last 200 days, interestingly enough, right? As you can see, 200 days, 200 days, 200 days. It's only during 2019, 2018 that we deviated from that trend. We saw it last for 400 days, but 2019, 2018, you have to remember, and 2020 was polluted by the COVID drop, right? The Black Swan event kind of complicated everything. Macro factors that were unprecedented, that couldn't be predicted, and kind of damaged the cyclical structure slightly. So we can't really take that data point too seriously. The fact of the matter is, and this was pointed out by Steve from Crypto Crew University, the fact of the matter is we do have quite a few trends here that say that after a few data points, I should say, that say that after the macro bottom, for example, macro bottom in 2011, for example, a macro bottom here in 2014, 2015, after the macro bottom, we see a phase one, which is a leg upwards. We then see 200 days of consolidation below the yellow line, okay? Just like what we saw in 2012, just like what we saw in 2015. And then finally, we see a move upwards again, a break of that yellow line. And on these two data points, in 2012 and 2016, we can actually extend that even further and say that after the break of the yellow line, we see 200 days of consolidation once more, okay, as I'm listing out on the screen right now, and then a break upwards again, okay? So there's kind of these phases, right? So in 2012, 2016, which we're copying quite perfectly now in 2023, we see that the leg upwards after the initial macro bottom, the sideways move, okay? And then we see phase three, which is the leg upwards again, and phase four, sideways move again, and phase five, an upwards move again. We've seen it happen perfectly over here and over here. This is, trends repeating over and over again. And so, what we're doing right now, as I've said, lines up perfectly. I know what you're thinking, right? You're thinking, oh, well, Wolf, you've only got 2 data points that perfectly line up with what we're seeing right now. How can you be so sure? Well, I'll tell you right now, yes, there are only 2 data points, okay? There are only 2 perfect data points, but we also have similar data points coming from 2013. We have these, lengthy 180-day consolidations, perfectly timed 180-day consolidations after legs upwards, and then continuing to see the macro bull market. So it's actually more like 3 data points. It's just not 3 perfect data points. The reason why I'm even bringing it up, right, because I usually wouldn't bring up something that only has 2 data points, because 2 data points doesn't make a mathematical trend. The reason why I'm bringing it up is because not only is there similarities in the structure, it's the date range trends that really get to me. It's the fact that this lasted exactly 190 days. And back here in 2016, it lasted exactly 196 days, literally the same amount of days. And back here in 2012, again, exactly 190 days, right? And then following that, once more, exactly 200-day consolidation, right? In 2016, exactly 200-day consolidation. It's more than just, it's nuanced, right? It's not just about the data points. It's not just about the amount of times it's occurred. It's about the precision of which it's occurred, not only from a structural basis, but also from a date range basis. And I think with a reasonable degree of accuracy, right, we could predict, right, with a reasonable degree of accuracy, I'm not going to sit here and say it's gospel because it's not, but with a reasonable degree of accuracy, we could understand that, hey, look, Bitcoin is following to a certain degree what we've seen in both 2012 and 2016. If we continue to follow that, okay, what we'll end up doing is consolidating for around a 200-day period, okay, since the break of this yellow line. That would bring us to May 2024, okay, so by consolidating, I mean going sideways for the most part, until May 2024, and only then, in May 2024, we will see the start of the macro bull market on Bitcoin. Not only does this make sense from a trend-based perspective on the charts we're looking at right now, but it also makes sense from a cyclical perspective, because you have to remember what happens in 2024. The halving happens in April 2024. What happens in 2024? We've got the ETF approvals coming in January. All of this seems to line up to a certain degree. It seems to make sense to a certain degree. It goes deeper than just, oh yeah, this looks the same as this, right? That's a very low IQ argument to make. It goes a little bit deeper than that. So, again, I'm not going to sit here and say that this is fact, this is gospel. I'm just saying this is something we need to look out for. And if we are going to be following what we did in 2012 and what we did in 2016, what we should be seeing next, and this is why I'm actually bringing it up, what we should be seeing next is a retest, just like in 2012, right? A retest of that yellow line. Just like in 2016, a retest of that yellow line at some point during this 200-day consolidation. And so what we should be seeing is a retest of around 30 to 32K at some point in this 200-day consolidation. We should be retesting that yellow line, right? So we should be going down, okay, and testing the previous range high at 30 to 32K. And not only does that make sense from a charting perspective, given the fact that we're seeing bearish price action in this region, it also makes sense from a perspective of looking at this macro trend that we've just identified, right? Again, I'm not going to sit here and say this macro trend is gospel. I don't believe it is, but I'm simply pointing out that it would make a lot of sense for the charts to play out like this, and it certainly wouldn't damage the macro structure for us to come down to 30 to 32K for a retest, because that's what we've done to the T, okay, in a very similar format in 2016 and 2012. And I want to take this a little bit further. I want to take it a step further. If we're actually being honest and we're looking at where Bitcoin is from a structural perspective right now, we can look at the weekly chart, right? We can look at this ascending kind of channel formation on the weekly chart, price chart, right? We can see that we're rejecting not only from the red resistance box, but also from the top of the ascending channel formation. We can see that the next logical move would be a move downwards to the bottom of this ascending channel, to this green box, which just coincidentally, right, or not so coincidentally, lines up with 30 to 32K. We can also see that the weekly chart RSI has a very strong support line forming. We're very far away from that support line. We've deviated quite heavily to the upside. It wouldn't be illogical at all. It wouldn't be damaging to the structure at all if we were to go down and retest that support line. That would, insinuate a price move downwards. The point I'm trying to make is that not only is this macro chart, right, with this trend, this developing trend, suggesting a retest of 30 to 32K at some point, right, in the next 180 days or something like that. But also the charts themselves, right? This ascending channel formation, the RSI formation, they're all kind of suggesting the same thing as well. And if you're thinking logically, right, what happens in TA, what happens in charts, right? Well, I'll show you, right? If we break, this is just TA 101, technical analysis 101. When the price is consolidating below a resistance line and you break it to the upside, you generally see an extension to the upside, and then you see consolidation, and then you see the price come back down and flip it for support, and then you see continued moves to the upside. That is how an uptrend works, because in an uptrend you see higher lows, okay, and higher highs. So you need to see resistance support flips in order for that uptrend to be maintained and healthy. So even from a fundamental 101 TA perspective, it would make perfect sense if Bitcoin was to come down to 30 to 32K. Now, I want to be very clear with you. I'm not saying at all that you should be selling all your Bitcoin now looking to buy lower, because I actually don't believe that's a logical thing to do. I actually don't believe that you should be making any dramatic market decisions right now, especially with Bitcoin just barely even rejecting at this point. I mean, we haven't even seen a proper rejection. Yeah, RSI is not looking good at all, but the price chart itself is literally at the peak. I don't think this is really the time to be getting out completely. Perhaps if we see a breakdown of this upwards trend, perhaps if we see a breakdown below some of these resistance support lines, then you can look to get out. But at this point in time, there's no actual confirmation of anything. I would look, for example, and this is where we'll get into stochastic RSI. But I want to clarify. I'm technically speaking, I would be looking to be more bearish on Bitcoin right now. I don't think that even if we are to break upwards here, right? Even in hindsight, I'd be happy being bearish here. It's just not something you want to get into the habit of doing. You don't want to get in the habit of being bearish at resistance. It's just a dumb thing to be doing. You don't get bearish at resistance. You don't get bullish at resistance, I mean. In the same way you don't get bearish at support, you don't get bullish at resistance, right? And the fact of the matter is, if you're looking to buy Bitcoin right now, well, what would the harm be in waiting for a breakout upwards? You've already missed 95% of the move, right? So this is not a place to be buying Bitcoin. I'll say that with 100% certainty. You don't buy Bitcoin resistance. You buy Bitcoin at support, okay? Or you buy Bitcoin when the resistance zone is broken. That's something I'll say 100% certainly outright, flat on the table. But realistically, if we're looking for an actual correction, an actual substantial correction, which we are looking for, right? Because we're looking for, realistically, what we're deeming to be more likely to happen right now is a rejection from this line, come down, retest something like this, and then go upwards again later in the year, right? Or more likely into next year. That's realistically what the chart suggests. I don't even think that's my opinion. I think if you accept that this charting formation is real, if you accept this channel is real, that's the objective truth, right? And what we're realistically looking for, right? If we are to see this to be confirmed rejection is something like a stochastic RSI cross on the weekly chart, okay? Now, I know what you're thinking. You're thinking, oh, well, stochastic RSI is, it's pretty unreliable, right? We've seen fake outs before, and you're completely right in saying that. But just because we've seen fake outs in something, it doesn't mean we can not take it seriously anymore. And I don't think a lot of people actually understand how stochastic RSI works. Stochastic RSI crosses are only confirmed when you've seen the cross occur and when you've seen the stochastic RSI descend back into this blue region, right? All of the time periods we've spent where we've been lurking right below the blue region or above the blue region have been invalid crosses. They haven't been valid. Stochastic RSI crosses are only valid, right? This is by the person who made the stochastic RSI. He says this outright. They're only valid when you see the cross and you see a sharp decline back into the blue box. Once you enter that blue box, both lines enter the blue box, that's when it becomes valid. So for example, a valid stochastic RSI cross would be this bullish cross we saw here. A bullish cross straight back into the blue rectangle, and we went upwards on Bitcoin, 53%, 43% to the upside, whatever it was, because of that. Another example would be over here, bullish cross straight back into the blue rectangle. We went upwards massively from 25k to 32k because of that. And if we are to see this bearish cross confirmed, and this is where you'd start to look into, well, at what point would this downtrend be confirmed? At what point would this uptrend end? At what point would we see this correction? You can look at something like stochastic RSI and you can see, well, if we are to see, right, this stochastic RSI be confirmed, and if you are to see both of these lines drop back into the blue rectangle without any complications in a sharp V shape, that would be a confirmation of the bearish stochastic RSI cross, and that would be a confirmation of bearish price action to come for Bitcoin. But I think I'm overcomplicating it a bit here. I'll speak more about the stochastic RSI in the future, but I want to simplify what I've said in this video just so there's no confusion whatsoever. So in summarizing what I've said in this video, what have I said? What are my claims? My claims are this. Bitcoin, okay, has seen irrationalities in the medium and short-term price action for a long period of time. But regardless of those irrationalities, we have to continue to trust for data and trust for charts. Otherwise, we may as well go play blackjack at the casino. That's the reality, right? So using our logic and using TA 101, we simply cannot be bullish at very, very strong resistance. It just goes against everything that TA stands for. We can't be bullish at strong resistance. We can then look into something like the macro trends that are developing. Now, the macro trends, the macro structures itself are very, very bullish. Everything points to upwards on a long-term scale. But there are trends within the macro trends, right? Like this, like what I've described in this video, that say that Bitcoin should be going down for a retest of something like 30k to 32k. And that is supported by the objectively true structures we see in the Bitcoin chart. For example, this ascending channel formation, 30k to 32k retest. Hence, I'm not sitting here and I'm not saying, I'm not predicting that we go downwards to 30 to 32k. I simply don't know what's going to happen next, but I can say this for sure. It is very, very possible that we come down for a nice, healthy retest of this support region before going upwards again. And with that said, I do not think right now is the best time to be buying Bitcoin, especially as we go into, unconfirmed, albeit, but very real threats of stochastic RSI crosses that we haven't seen actually trigger for upwards of 8 months. And realistically, the last effective clean one was a year and a half ago, right? It's simply not the time to be getting bullish on Bitcoin. You've had all of this time, right? All since, when was it? September 11th. You've had all of this time to be bullish on Bitcoin. You've had all this time to reap the rewards. Right now, we are at the top of a 53% move. Yes, we keep seeing conflicting news. Yes, we keep seeing this price action hold upwards. But again, there's only so long we can ignore TA, ignore the charts. You do not buy Bitcoin at resistance. That is stupid. That is low IQ. And with the trends and the analysis I've given you in this video, I think I've given reasonable, a valid reason to accept that perhaps a healthy correction is very possible or even on the table. With that said, I wouldn't be shorting at the moment until there is confirmation of a downside move, until there is confirmation of the uptrend being broken, until there are actual lower lows being made, but it's certainly on the table and it's certainly more likely at this point. Guys, thank you for watching the video. I hope you enjoyed, and I'll catch you in the next one. Just before we end here, check out the Bitget exchange, check out the Bingx exchange. These are the two exchanges that I've handpicked for the Wolves of Crypto YouTube channel. Bingx is a global non-KYC exchange. You can sign up from anywhere in the world with just an email address and a password. And Bitget is a global KYC exchange. You can sign up from anywhere in the world except the United States of America with an email address, a password, and identity verification. As I said, both of these exchanges are hand-picked. They've both got very low trading fees. They have never been hacked before. Go ahead and get one of good exchanges. With my referral link below, you'll get a 15% trading fee discount on either of these exchanges. So go ahead and do that if you're interested. Help yourself and help the channel. Furthermore, if you want to learn how to trade for yourself, you want to learn how to analyze charts for yourself, the Become a Trader 10-unit course from the Crypto Academy developed by myself and my co-analyst Megawell Crypto. He's got a YouTube channel himself. Check it out. I've made this course, right? You can read all about it on the website. We've got 10 units in there in a university-style format, slideshows, videos, worksheets, trading diaries, everything you need to know for every type of learner. And finally, guys, before we end the video, VIP group on Telegram. We trade altcoins sub-daily on there. We've been extremely profitable in the past. We will continue to do so in the future. I'll try my best to make it so in the future, especially going in the bull market. We've got an 80.5% win rate with every single trade we've ever taken marked and tracked on a publicly available PDF. That's absolute transparency. We've got our pricing details on there, our membership details, and the 14-day free trial information. If you're interested in checking that out, it's all in the description below. Guys, thank you for watching again. I hope you enjoyed, and I'll catch you tomorrow in the next video. Cheers.